Patience is one of the hardest skills to learn in markets, and boredom shakes out just as many people near the lows as red candles do. Often the best strategy is time in the market rather than time in the market. And you'll hear other things like, we're buying to never sell. There might be a real estate investor out there that's like, real estate investing, it's a buyer market. It's never a seller's market. Like, real estate is for buying. It is not for selling. That's just one example. But, people like a long-only equity fund, they'll be looking for companies they want to own equity in for the long term. Now, what's James referring to when he's talking about patience? I'll quickly just go to the piece itself. It's called A Weird Cycle, and I'll link it in the show notes. It's an excellent newsletter. I highly recommend checking it out, and I'm a subscriber myself, and it's so helpful. I'm the target market in many ways. It's like, help out the hodlers out there. Okay, so the subtitle to the article is, this cycle's quite weird, and it's thrown many investors off balance. Some feel Bitcoin's performance is lackluster, others were left behind in alts, and many are missing the forest for the trees. Now, I'm not going to go and read the whole article, obviously, but there's plenty of things in there that I felt really, really helpful. Just in terms of like, where are we at, what's going on, what actually represents good performance. And I think it was this one line, like about being patient. As I said, I'll remind you, patience is one of the hardest skills to learn in markets, and boredom shakes out just as many people near the lows as red candles do. So commonly held psychology in investing, or anything, gambling even, people close out their position when they're ahead faster than when they're down. I.e., you put in $10, as soon as you've made $10, like, sweet, double money, I'm out of here. Whereas you've lost 10, oh no, now you've lost 20, now you've lost 30. People hold the pain for much longer. And what James is quite rightly pointing out is, like, sometimes it's just a bit boring. Like, hang on, it's the 3rd of June. What the hell's going on? Back in 2022, I said a timeline based on, of course, previous performance. And a good point here to make is, like, past performance is not always indicative of future performance. Like, just because something has happened, and you can look at some trends, you can look at some bands in terms of the technical analysis that you can overlay on charts and the price action. So it's very, very unlikely that we're going to break the 200-day moving average. So if we ever did, then that's probably a good opportunity to buy. And so, are we being patient enough right now? Well, as I said, I set a strategy back in 2022 to hold Bitcoin until August of 2025. Now, we are literally weeks away from that time. It's a multi-year trade in some ways, or a long-term hold, as other people might call it. And you're like, okay, well, the truth is, the investment itself, it's done fucking well. 4x, 5x up on capital invested. Well, it makes sense to take profits. Okay, but when? And there were people out there, shout out to Dr. Jeff Ross, who's someone actually I find really inspiring in terms of their approach to all of this, but on what Bitcoin did a couple months ago with Danny, talking about a 400,000 plus US dollar Bitcoin price. And he's looking at global money supply and thinking, okay, the tap's about to be turned on. We're going to see some outrageous asset price shifts. And in particular, Bitcoin is going to fly. And I don't think Jeff's wrong, but like, when? And we're now like June. And hang on, so we're just fluttering around 100,000 US dollars a coin. So it's going to 3x from here in the next 3 to 6 months? Like, is that really possible? And so who knows, right? Time will tell. But James's analysis is so on point, because it's like, guys, sometimes it's okay that it's just boring. And that's in particular true for an asset class like Bitcoin, because as I've studied at least, the main price action of Bitcoin happens in a very short period of time. It's something like 9 to 10 days of the year are the days with the most price action to the upside. So you've got 350 days of sitting around doing absolutely nothing, and then just it flies, and a new normal is set. And so that's what we're sitting around doing. Is there still a bullish case to be made for Bitcoin in terms of other areas that you can look at? Like, what's happening in terms of hash rate? What's happening in terms of user adoption? What's happening in terms of the actual transactions going on the network? Like, is it actually busy? There's all sorts of other areas that you can start to look at. I mentioned already the global liquidity of central banks, like M2 globally, is a very, very important number to be looking at. And Dr. Jeff's quite right about that. But the point is we don't know when this stuff's going to happen. And that's what investing is in some ways. It's like, okay, sit down and make a bet. You get given your £100 today. It needs to be there in a year's time in terms of purchasing power. What are you going to do with it? And how are you going to get it there? And maybe it's not a year time horizon. Maybe it's 2 years or 20 years or 25 years. It doesn't matter. The point is that as an investor, you allocate capital and then you wait. And whether you're buying Bitcoin, which is a monetary network, you own a piece of the base layer of the future monetary system I believe that we will have, or whether or not you're buying a fraction of a company like an equity, or you're buying a bond, or you're buying a classic car. It doesn't really matter. The point is, it's like once you've done it, you've got to then wait for your thesis to actually play out.